What is good, YouTube? It's your boy Little Effects, back at it again with another video. And this video has been highly anticipated. You guys been waiting on it for a long time. So in this video, I'm going to be giving you my ultimate market structure guide to 10x your trading to take you guys to the next level, right? So of course, within our market structure, we have to understand what is the reasons behind we even need market structure in the first place, right? So I like to equate market structure. It's kind of like having a GPS while you're driving. So you know what exits to get off at and you know what turns to take. So if you understand market structure, ultimately you understand the story that the market is overall telling you. So when you look at structure and you understand structure in totality, you know the story the market is ultimately giving you. And when you know the story, you can pretty much capitalize on all of the moves inside of the market, right? So it also gives us insight about what's about to happen next. So let's go ahead and get straight to it. So we know that the market consists of three phases. If you guys have been paying attention to my last market structure video, I talked about this very often, but now I'm going to give you the in-depth insight on how I approach the markets currently in 2023 with market structure, right? So with market structure, we understand that the market moves in three phases. These three phases go as such: impulse, correction, continuation. Our impulse is our aggressive push to start our initial move, right? Our correction is our corrective move where price starts to take a breather before it gives us our overall continuation move. So I like to equate it kind of to like running track, right? So if you're running track, you might sprint, which is our initial impulse. And then of course you can't sprint forever, so you're going to get tired. So when you get tired, you need to take a breather. So that's the same thing that the market does. It sprints for a little bit, which is our initial impulse, and then it takes a little breather, which is our correction. Once it takes that breather and then gets it some water, gets it, its rest back, then it goes for another sprint, which is our overall continuation. So those are the three phases: impulse, correction, continuation, right? So I want you guys to take that idea and set it aside for a little bit, and while I go more in depth to the technical aspect of our overall market structure. So our overall market structure consists of a series of lower lows and lower highs in a overall downtrend, and then a series of higher highs and higher lows in a overall uptrend. So this will look as such: higher low, higher high. So higher highs and higher lows in a overall uptrend structure. So this structure is going up. In the uptrend, this structure is going down. So when you have downtrend, you have lower lows and lower highs being formed. So it's super important that you understand that concept, because now you can recognize, okay, what direction is the overall market going? Is the market going up or is it going down? The way you determine if is it forming lower highs and lower lows, which means that this lower high is lower, this high is lower than this previous lower high point right here. And that's where the term lower high comes from. Here, lower low, this low, well, actually, it should be a low right here. Oops, my bad. This low right here is lower than this low. So that's where the term lower low comes from, right? So if we understand that this comes from this overall lower low and lower highs in a downtrend, then the same thing applies to our overall uptrend, where we have higher highs and higher highs and higher lows, where this higher low here, this higher low is higher than this previous higher low point right here, and then this higher high is higher than this previous higher high right there. So that's where the terms lower lows and lower highs come from in the overall an overall downtrend, and the higher highs and higher lows come from in the overall uptrend, right? Now, those are super important, because you will use those concepts to let you know when the market is beginning to shift in trends, which means that you're going from an overall downtrend structure, which will be this downtrend structure here, into a newfound overall uptrend structure. So that's how you dictate when the overall move is over, right? So the move will be over once price transitions from an overall downtrend structure to a newfound uptrend structure. So the way you determine that is what we call by a break of structure. So you might hear me talk about this in my previous videos. You might caught on to it, but I'm going to go in depth into it right now. So in order to have a break of structure, you must have a break of a most recent higher high or a most recent, a high point or a most recent low point, right? So in this case, our break of structure line will be at this most recent lower high point since we are in a downtrend. In order for price to go into a newfound uptrend, price must break above this most recent lower high point, which is our break of structure line, correct itself, which is our impulse, our correction, and then give us our overall continuation. This is where we will start our overall transition from a downtrend into a newfound uptrend. Because why? Price broke overall market structure. So if you understand that concept of, okay, I must have this most recent lower high point get broken before I transition into a newfound uptrend, then it will save you a lot and then give you a lot of opportunities to buy in on the reversal of a trend, right? So you will take that same concept and apply it to an overall uptrend, but you would just flip it. So our break of structure on a overall uptrend will be our most recent, oops, I didn't mean to do that. Our most recent higher low point, which would be right here. So if the market decides to give us a brand new impulse that breaks beneath this most recent higher low point, corrects itself, then we can be looking for that overall continuation. And then this is where we will be overall looking for our transition in our structure to go from a newfound uptrend to a newfound downtrend. And when we have our downtrend, we of course will be looking to create lower lows and lower high points up until the point where price gives us a break of structure and we transition again, right? So the market is pretty much consistent of all of these sequences where you going from a downtrend to an uptrend, from a downtrend to an uptrend. Now, let's just use this example as a major structure trend. So when you understand that this is a major structure trend, of course, we have different time frames that correlate inside of the market. So if you can understand that I have a higher time frame trend that is made up of a smaller time frame trend, you can then capitalize on the smaller time frame moves inside of the major structure moves. So what I mean by that is, if this is a 4-hour structure here, because we're on a 4-hour time frame, if this is a 4-hour downtrend structure, this overall 4-hour downtrend structure doesn't just push straight down all the way. Like, it has different trends inside of it. So on a minor structure, it will look a lot like this, where you have a minor structure downtrend, which is illustrated with the red arrow. Then you have a minor structure uptrend, which is made up of that overall correction of the major structure leg. And then you have a downtrend, which is in alignment with the overall continuation of the major structure leg. So ultimately, you have uptrends and downtrends on minor structure that make up the overall downtrend structure on major structure. So the red here is the major structure, exactly how I drew it up down here. So it formed lower lows and lower high points all throughout this area, and then it's forming lower lows and lower high points throughout this area as well. But now the black lines that we have here are the minor structure, so we would just equate this as our 1-hour structure here. So wherever I have a dot, that will be either a lower low or a lower high or a high or a higher low, depending on if the market is going up or if the market is going down. So here during this red phase, which is this arrow right here, we're forming a series of lower lows, and I'm gonna make this smaller so you can see it. Here we're forming lower lows and then lower high points. So let's change this to a lower high. Boom. So now I have lower lows and lower high points being formed on the minor structure of this overall 1-hour trend. But it's all inside of the major structure move, which is an overall downtrend. So similar to how I talked about on that 5-minute scalping strategy, if you see the trends changing on a smaller time frame, you can take advantage of those opportunities, but you have to still understand that you are in a overall major structure downtrend, and you have to understand that minor structure can always easily be broken. So you can see here that we had a transition from our most recent lower high point here, and I'm going to draw my breakup structure. We broke the most recent lower high point on a downtrend, which indicated that we are now transitioning to an overall uptrend. So we had a brand new impulse, a correction, and then we got our continuation, correction, and then continuation. So this put us in a overall uptrend on minor structure. So it's super important that you guys understand the difference between what structure you're in, whether you are in your minor structure or if you're in your major structure. You have to be in correlation, and this is where top-down analysis comes in, because now you can understand, okay, has my most recent lower low or my most recent lower high point got broken on my major structure, or has it only gotten broken on my minor structure? So if I understand that my major structure hasn't gotten broken but my minor structure did, that lets me know, okay, there was a shift in structure on my minor, but the overall structure is still intact, it's still being maintained, it's still in this overall trend that it was originally in. So if I do take a trade that is against this trend, I know that I'm going against the trend on the overall major structure bias. So that's super important. It's something that you guys want to make sure that you pay attention to, right? So we can see here we went from a downtrend into a newfound uptrend. Once this uptrend was finished, and mind you, this whole uptrend was a correction of the major structure move here. So we had an impulse, a correction, and then we got a continuation. So even though we're in an uptrend on minor structure, this was just a correction on the major structure move. And then we got a overall transition into a downtrend, right? When we got that transition in that downtrend, we had to have a what? A break of structure. So that's where that break of structure line comes in here. We had an impulse break followed by a correction, and then we got our continuation. So like the note says here, ups and downtrends are forming on minor structure, but the overall major structure is still in a downtrend. So if I take buys in this opportunity, I know that the buys are not going to last forever. They're very short lived. So I can't expect to be in these buys for a very long time, and I have to treat them with extreme caution because I'm going against the major structure trend. However, I still can capitalize on it. If I'm like a scalper or intraday trader, I can take advantage of those uptrend moves day in and day out simply because I understand the flow of market structure. But if I'm just a swing trader, then of course, yeah, I'm only going to be looking to trade the overall trend because that's the main structure bias. But like I said, intraday and scalper, you could take advantage of these moves. And if you guys know and understand, just my overall like trading style from, my previous videos, I like to use fibs. So you can draw a fib on, these structure points and let price hit your TP. And then by the time it hits your TP, price is then going to be going into the overall major structure continuation. So it's really a science to it. So that's pretty much like how I approach market structure, and I want to give you guys my market structure strategy just from how I approach the market. So before I give you guys my market structure strategy, make sure that you guys hit the like and subscribe button. And this video is also sponsored by Henkel Trade, so go sign up with the link in the bio. I mean, not the bio, the description, before we even move forward into this video. So I'm gonna give you guys 5 seconds. 5, I'm gonna give you 10, 10, 9, 8, so forth and so on, right? So make sure you hit that like, subscribe button, be greatly appreciated. So like I said, I'm going to be giving you guys my overall market structure strategy, right? So let's go to the charts here. So we can see here on gold. Gold was in a overall 4-hour uptrend here. So we can illustrate that as such from our low to our high, higher low, higher high, higher low, higher high. This right here is our most recent higher low point of this 4-hour structure. So how will we play that? Of course, if we're looking for sales, we need to see structure break our most recent higher low point in a uptrend. So we would draw our breaker structure line here. Boom. So once price breaks this area and gives us a retest, that gives us validity to say that, okay, price is now in a newfound downtrend. So what did price do? Price broke this level impulsively, corrected itself, gave us a continuation, gave us another correction, gave us another continuation, another correction, another continuation. And that's what started this overall downtrend, stemming from this overall uptrend structure. So if I was just to look at this sort of in like just like a line chart, you can see that these are just highs and low points that are being maintained without all of the candlesticks, right? So if I understand that these are just highs and these are just lows that are pretty much like playing ping pong against each other, breaking each other, coming back to get retested, then the market is simply just a game of knowing where you're at inside of the market and bouncing off of each other, like bouncing off of these levels, right? So I understand that this is structure. The higher low point got broken. Okay, we got an impulse. We know, we already learned this in the previous videos. We know what the impulse tells us. Now we get our correction to confirm that, basically our break and our retest, and then we got our continuation, and we started this overall downtrend. So now look at where prices at with gold now. So we can see here, downtrend. This is our most recent lower high point. So what do? We had a break of structure. So now what would we be looking for inside of the market? This is live price. So we will look for a break and a retest of this most recent lower high point. And then we'd be looking for a continuation, simply because this will be nothing but a transition from a downtrend into a newfound uptrend, similar to what we have here. We were in a downtrend, we broke that area with the break of structure, came back to retest it, and then we went higher, right? So impulse, correction, continuation. So this strategy applies on every single time frame. So of course, if I was to break this structure down into a smaller time frame, such as the 1 hour, then we could see the same concept applies. We had a low to a higher high to a higher low to a higher high, impulse, correction, continuation here. And then what do? We broke structure with a brand new impulse, then we got a correction, and then we got a continuation. So we went from an uptrend to a newfound downtrend. Simply, and I'm gonna erase this so it could be a little clearer for you guys. Uptrend, broke structure here, break of structure line, impulse, correction, continuation, right? So now we understood, okay, we broke this area. Now we need to see how far this price is going to correct itself before it gives us our overall continuation. Now that's a whole nother video in itself to know when a correction is over, and something that I teach inside of my course. You can visit www.lidofx.com to become a blueprint student to learn about how to know when the overall correction is over. But this is my overall strategy on how I approach the market. So I'm just pretty much looking for, pretty much all I'm doing is I'm looking for an overall top-down analysis to understand, okay, what is the story the market is telling me right now? Simply, I understand, okay, what is the structure? Am I in an uptrend? Am I in a downtrend on this particular time frame? Once I'm on this particular time frame, I then drop down to the smaller time frame to see what particular structure am I in. And then I analyze that and I drop down to another smaller time frame. And I do that time frame by time frame, starting from the monthly down to the weekly, down to the daily, to the 4 hour, to the 1 hour, to the 30 minute. And once I'm down to the 30 minute, it's about looking for my potential entries on M15 or M5. But it's all structure in itself. So if you guys can understand the structure and identify what are the definitive highs and the definitive lows of the trend that you're in, then you can capitalize on these moves. And when you have a break of structure, similar to what I talked about in the beginning video, if you understand structure, it's like having a GPS. It tells you what exits to get off at and what turns to take. So if you're in an uptrend structure that's going against the major structure trend, so let's pull this back. If you're in a overall uptrend structure here that's going against the major structure trend, which is down, the GPS, aka structure, tells you when to get off at the exit simply when you see a break of structure. That's a very high indication that the market is now about to reverse. So that's your GPS telling you, hey, you need to get off at this exit so you can get to your destination on time. So I hope this video was super helpful for you guys. Make sure you guys hit the like and subscribe button. And if you follow my Instagram, I know it is in the corner to the left here. But I am taking a break from Instagram for the next 60 days. I just want to focus on my YouTube channel. I want to focus on my trading community. I want to focus on myself. So I'll be dropping a lot more content. So leave a comment on a video that you potentially want to see next, and how did this video help you. If this video helps you, make sure you, like I said, hit the like and subscribe button. Show me some love so I can continue to print these videos. Like I said, these next 60 days are personal, and I want to bring the best value and the best content that I can to my YouTube, and it's all about you guys for the next 60 days. So like I said, I'll see you guys in the next video. Peace out.